My name is Vishnu Malpani. I'm a full-time director with the company. Over the next few minutes, I will take you through, various slides, which will give you a quick snapshot of what we do. I think we will need, slightly over 20 minutes to do this. Generally, we take a couple of hours to explain our company, but I think we'll try and wrap it up in about 20 minutes or so. So, yeah. So Azad Engineering, is a company that manufactures highly critical precision manufacturing parts that are very, very mission critical and life critical. You would have seen in the video that we were trying to showcase that every part that goes in an engine is obviously, aircraft engine is obviously very critical, but the criticality also matters of what is the part that you're manufacturing. You could be manufacturing a seat of an aircraft. You could be manufacturing an armrest of an aircraft, but an aircraft can run with a tilted seat, but not with the part that's rotating in the engine at 30,000 feet. So we manufacture such parts which are highly critical, and that's why we say we are a manufacturer of life critical and mission critical parts. We have been in operations for 15 years. We have worked with global OEMs. Today we are operating in 3 sectors: aerospace and defense, energy, and oil and gas. In each of these sectors, our customers are the global OEMs. So globally, the companies that are leading these sectors are our customers. And we are working with them. On the energy side, we have an average relationship of over 10 years with our customers. So the entire energy industry, like Mr. Chodar was telling you, is controlled 70% between GE, Mitsubishi and Siemens. And if you look at the global electricity demand, the electricity that is coming to our houses, to this hotel, or to the industries, is generated with fuels such as gas, nuclear, thermal, hydrogen. Today, Azad has the capability to manufacture parts for nuclear turbines, to manufacture parts for gas turbines, to manufacture parts for steam turbines, and even hydrogen turbines. So whether you look at it from the capability in terms of the fuels that generate electricity, we are there, or whether you look at it from the customer's perspective, we are still there. So we have established ourselves very, very strongly in the global ecosystem, and we are on the verge where our wallet share is going to go up further. Over the last about 15 years, we have worked really, really hard. There's a lot of effort that's gone in to qualify these parts, and today as a business we have over 1400 qualified parts and about 45 qualified processes. Our business is 80% export. Today we work with 95% of our revenue comes out of private companies which are largest global OEMs in the sector. As a business, you would have seen some critical parts that are rotating and the airfoils. We have supplied over 3.09 million such parts over the last about 14-15 years. And these parts are today running in various geographies around the world, in various turbines around the world, very, very successfully. We are present in an industry that has zero error, because obviously any error in this industry can be life-threatening. It could be a massacre in the air or could be a power outage in a city. In terms of our market addressability, today you have a market of about $3.5 billion that we're targeting on the energy sector. We are working with the right set of customers, we are working with the right set of products, and the market is very, very large. On the aerospace side, it's a high growth industry. Today the addressable market is about $12 billion, rising to about $19 billion by about FY27. Oil and gas also is a very large sector. Today the target addressable market is about $9 billion right now. So we see that you would be able to see that with the right set of customers, with this highly entry barrier driven business, the business is positioned very, very beautifully. I have spoken about the business factors. Let me give you a sense of how we've done financially as well. Our company also has a very robust financial profile. We have grown our revenues. If you look at our revenue growth from FY21 to FY23, we have grown our top line from 122 crores to 251 crores. That's a growth at a CAGR of 43%. While most companies, while focusing on growth, they let go of their focus on profitability. But let me tell you, gentlemen, ladies and gentlemen, that we have ensured that our bottom line has also grown by 46% at the same period. And we have a constant focus on our operational metrics as well. If you look at, these are some of the parts that we manufacture on the aerospace side. You look at our end use, you will see that our parts today go in business jet crafts, commercial jet crafts, training jets, helicopters, so on and so forth. And we manufacture parts that are part of the engine. These are extremely critical parts that require extreme engineering capabilities to be demonstrated. These are some parts that we manufacture on the engine side. Our application in these industries is towards power generation, renewable energy integration, marine propulsion, so on and so forth. In terms of our key investment highlights, I would say that we are an organization that is having an experienced promoter and backed by a very senior management team. Our team is very strong and we are backed by the right set of investors today. Today as a company, we manufacture mission and life critical parts and are a preferred supplier to the global OEMs that we are working with. Today, we are termed as a strategic growth supplier. Our growth in terms of our financial performance or growth numbers is very consistent. And our facility, we were able to also give you a sense of how advanced our manufacturing facility is. This is something, in Hyderabad, we have 4 manufacturing plants, over 20,000 square meters. And based on the target addressable market and the growth that we're seeing in the sector, we are coming up with 2 large plants in pipeline, which will add about 8 to 9x of the current capacity for us. We supply, again I would like to reiterate this fact, we supply to the OEMs in global markets that are very high market penetration in each of these sectors. Our relationships with our customers are very deep, and this is reflected in our financial profiles as well. I'll take you through our financial numbers. Maybe I'll spend 2 minutes on the financial numbers as well. So if you look at, our revenues have grown from 122 crores to 251 crores last year. I would like to say that please look at our H1 performance. We've delivered 158 crores already this year. Our EBITDA has moved from 37 crores to about 79 points. Our EBITDA has moved from 37 crores to 79.5 crores last year. This year, H1 we've already delivered 53 crores estimately, which is a 33.3% EBITDA. Our PAT margin has gone up from 16.3% to about 17.3% last year. And this year we are already in the H1 delivered 29.4 crores, which is an EBITDA margin of 18.4%. Our ROC in the business is fairly stable. We've delivered an ROC of 21.2%. Our contribution of export is 80%, and that has been pretty consistent over the last few years. If you look at our reliance on the public sector companies in the country or the private sector, we have 95% business coming out of the private sector. We have a very able board of directors. We have, from the company side, we have Mr. Rakesh Chopdar, Mr. Jyoti Chopdar, and myself. And we have Michael Joseph Booth, Mr. Subbarao Ambati, and Mrs. Madhushri Vemiru as our independent directors. We also have a very capable, strong management team. And I would like to share that all of us, are part of the management team, are also shareholders in the company today. We all have equity, so we have experienced professionals that have been around with the company right from day one. So many of my colleagues on the slides here have been around since inception of the company, and we are doing extremely well. So in terms of our growth strategies going forward, you will see this, that although the industries that we are working with has few set of customers, we are diversifying in our customer base in their product portfolios as well. We are augmenting our manufacturing capabilities and also capacity going forward, and our core capabilities, so that we can venture into more of these products and increase our wallet share going forward. So that's from our side. Thank you very much for listening to us.
I think we can open the floor for Q&A. Management will be happy to answer that. Thank you.
While going through the presentation, the most exciting future is 80% of your revenue is through export. So I would like to know which are the prominent countries we are exporting to, because this is very essential for our country. And what are your future plans? Is it going to be more countries, exporting to more countries, or whichever countries you have, you are going to be the more portion of your export to these remaining countries?
Thank you, ma'am. Thank you for the question. Yes, you're right. The major contribution is going in exports. There was one year, I don't remember which, but it was almost 90 plus export in this. The customer base, as I told you, in the energy or whatever the niche industry what we work, they're very limited and handful companies who are really in this business and have to. So, like I take an example. There's an example for General Electric. General Electric is a company based out of USA in Atlanta. They have factories across the globe. They may have one in Germany, they may have one in Middle East, they have one in Australia, India, wherever they are. So strategically, when they try to do business with us, we are not just for Atlanta. When a strategic a partner is chosen for the entire network. So by default, all these large companies, MNCs, we see whichever country you go, we have a facility of there. So we will have communication with the buyers across the world, like G or the Mitsubishis or Siemens or XYZ, whatever the companies you have seen the video, you can imagine the names of the companies who are there. So they are spread across the world.
So it's almost covering the whole globe.
Yes. That is one sector. Then we go in defense, then we go in oil and gas, then we go in energy. As you penetrate and the marquee names what we have is something they're present everywhere in the world.
Nice.
And I think I'll just add to that fact. I think as a business today we supply to over 15 countries, and all the developed countries that you would know. So we supply to Japan, US, Europe, and the other countries. So all of these countries are there, and this will continue to be export-driven business for us.
So wish you all the best to cover the whole world.
Thank you.
Thank you.
I think the question is which country we don't work.
Yeah,
you can ask that
like
country.
that, yes,
We work with almost all the countries.
Hi, good afternoon. This is Sonia here. I was curious to know if this technology is patented.
No, ma'am. As I mentioned, this is not a two-dimensional product. It's an open sector throughout the world. But when products like the rotating parts, what you have seen, I'm sure that video has helped everyone to understand what I mean by 3D parts. So as and when these parts get sophisticated, everything gets sophisticated. So for this particular production line, I would say there is no ready-made technology. We have to form our own kind of use those 5-6 factors to get and come in there. So there is nothing called, we can't patent in that area because there is no set process in this.
Having said that, while this industry, we have our internal processes which are very, very strong that have been qualified with see, we are a strictly build-to-print company. We work on the designs that are shared by the customers. So in this industry, patents are generally given by the customers. So for us, we qualify components, we qualify processes. So you would have seen, we have qualified for over 1,400 products or parts numbers which are across businesses, whether it's energy, aerospace, etc., and about 45 qualified processes. So for us, that is a bigger milestone than this is how you look at it in this industry.
Yeah, when 1,400 parts is mentioned, I've shown you the picture, right, of a compressor. I showed you multiple stages. So that one stage is one part. So such one spend months and months covering to a 1,400. So that's the time, 15 years it took. If it's not us, whether it's China, it's America, it's anyone, that's the time anyone can get. No money can shortcut that time. Because every test is being conducted, every approval has been in place, and that's the reason it goes and fits in the engine, and we all are safe here.
That is one of the 4 prolonged strategies that we have, because we are preparing for increasing capacity, 2 pipeline plants that are coming up, which will add about 8 to 9x the size of the current capacity for us.
What is the current capacity? Can you quantify that?
So we today operate around 20,000 square meters. We are adding another 1,70,000 square meters over the next few years.
Hello, yeah, Nilesh Ragela from Mumbai Samachar.
And what is the CapEx going into?
So Sorry. So, yeah, so today we are deploying capital in growth capital only. So this will be towards infrastructure and capacity creation.
How much is that?
So we are raising a capital of 240 crores primary. The two utilization criteria for this is debt repayment and capex. I am talking about the growth capital, which is the capex towards.
Hello. Yeah, you have mentioned that you have supplied to global players who are having 70% control over the market. So you are regular supplier to them. Do you have any specific contract with them, or they are just 5 clients you mentioned?
Sorry, when we say 70% market, it's not us.
Yes.
70% market is controlled by our customers.
Yes, that's
the
clear.
3 customers. So these 3 customers, we are qualified with when we showed 1400 parts, every part, few parts are with one OEM and all, so it's a mixture. And those parts, we are now having a percent of wallet share. Now when we agree that again, this product is not driven by cost, this product is driven by the capability, ability, consistency. First you have to prove these 3 and then comes the price. Okay, what price? When the price comes, we compete countries, China, Europe, Japan, America. When we complete this 4th factor, then is where if we are the best price, then is where they try to increase the capacity because we want to increase the wallet share. So for that we have contracts, we have all the arrangements with the OEM as we are a strategic supplier.
Okay, and nowadays government is giving special boost to defense sector. So how it benefits to you?
See, we are a global player. Okay, we stand ourselves as global player. We don't fall under any offset condition. Like if some OEM has a compulsion to spend that money in India, we don't fall under that category. We are positioned as a global supply chain, right? Whatever parts we manufacture is being utilized worldwide. Which country it goes, where those 3 million parts are operational today, we don't know. It is spread across the board. Now on the part of defense or this thing, as I told, we are in the rotating parts. We want to keep the legacy because this legacy is a classic part. For us just to get revenues on taking a precision machining route or a forging, that's a step down for us. So we're just trying to maintain the legacy what we have in being the class A part, whether it's defense, whether it's aviation, energy, oil and gas, or any sector.
Thank you.
Sir, Ravi Ranjan from Deccan Chronicle. Who are your, in India, who are your major clients?
Clients we have in energy sector, we have GE, but that GE is controlled by the headquarters. Okay, so that's where we talk about energy. Aviation, we have, sorry, I think we don't have some consents and.
Okay.
So, yeah, but I just add to that, all the key players that are, so we obviously in the interest of time could not receive consent from all of our customers.
We didn't have time to take the consent, so
Yeah.
all the players who are in this industry.
Yeah, I was wondering if you could name some PSUs in India.
But we don't have consent at those lines.
Thank you, sir.
You can come to the facility.
Yeah.
A few questions from the journalists who have joined virtually.
Okay.
So the first question is a continuation. In your business, is there a client concentration risk kind of a concept?
Okay. The answer is, if we talk about aviation sector, only duopoly, only 2 companies are there, Airbus and Boeing. They control 91%. Where do we find the 3rd customer? That way, we have, as we spoke, this is a very regulated, very close and very sophisticated industry. So you will not find many players in this. So as the suppliers working with us. I hope I could answer that.
The next question is from IPO Central, Mr. Anil Sharma. What are the reasons behind the fluctuations in the ROCE
Yeah. Yes.
2023 and
I think I pass this question to Vishnu. My colleague will answer that.
Sure. So, what is the fluctuation in? ROC. See, ROC, optically for you, if you look at the reported ROC, it would seem lower. because we have done investments in land, we've bought land, which we are preparing for the new facilities that are coming in. There is cash in the bank which is available right now, and there are some advances that we've paid towards capex. All of these three factors put together are not yielding revenue right now. And any asset where you have invested in that is not yielded revenue will look like it will drop your ROC optically by that percentage. But if you normalize for these three factors that I mentioned, we will be doing an ROC of 21.2%. And which is the right way to look at it, because high growth companies will constantly have to keep investing in assets, creation, capacity creation, etc. because that's the only way we can grow.
And this land being taken considered after having such experience and exposure to the world, now we have planned to not just short term, this planning or the investment done is for the very longest time. Means we may not run, I don't know, let's say, okay. Yeah, that's it.
Yeah, next question. Right now, majority of your revenues come from energy. How do you see the mix between energy, aerospace and defense changing in the next few years?
See, we started with energy. So, as these three giants, we took model by model, OEM by OEM, part by part. As I mentioned, if someone can relate that the picture what I've shown in the compressor, there are many such stages and all are different. And took us 15 years to cover up those three and to make sure that we can park these qualifications, turn this into production mode, focus on the revenues which is going to fetch us, and then we started the aerospace in around 1920. So we are relatively, if you check the history of energy presence in Azad and check the history of aviation energy presence in Azad, it's very short. So 2020 is where we got into the aviation sector. However, we are not new in this industry because the hard work what we have done for these airfoils and energy has got those star marks, which has given a very good credibility in the aviation market, where we don't have to come and show that we are a startup, or we don't have to come and show that we are not ready for any kind of tough parts. So these airfoils have really helped us to fetch us to the class A position, the aviation as well. So it has just started, and the qualification part is ongoing, and is going to take its the limited time. What it took in energy, it may not take that much time to reach this scale.
I'll just add to this question. Our current mix of the business, rightly said, is about 90% and about 10% aerospace, but we are a part of a high growth sector. If you all are all aware of the growth that we're seeing in each of these, whether it's aerospace and defense or whether it's energy, you should, because of the SEBI guidelines, we can't obviously share the numbers, but I can give you an example. Please imagine the life cycle of a company. Every life cycle of a company has 4 phases. There is an introduction, there is growth, there is maturity, and there is decline. We have just finished the introduction phase and we have landed in the second phase. So I would leave it to y'all to decide how we are going to be growing, but the mix of the business is changing according to that.
Indian players who are listed here.
So we don't have, we cannot be compared with the existing because these parts what we manufacture, I don't think there's anyone else in India. As I told you, we compete with China, we compete with Europe, we compete with Japan, US, and other than there. And there is no comparable for the product line. As I told you, it's a step down for us to take up anything which is
So competition, if you look at competition, so competition can be looked at various forms, right? You can talk about whether you compete with any player in the parts that we manufacture, whether you compete in the same sector. So obviously, like Mr. Chopdar was saying, we may not have a direct competition for the products that we supply, but obviously in the sector there could be a few names that are there as a part of the DRH. So at a product level, yes, we do not. Our investors that we have, DMI Finance, as our investors. So between all of them, so these are the 3 sets of investors that we have. We've had very good experience with each of our investors, and each of them have actually helped us get to the level that we are today. So we raised capital with DMI in calendar year 2021 with Piramal Alternatives and the group of HNI in calendar year 22. So for us, it's been really well, and I think a large part of our growth is being fueled by the investments that we've raised in the last few years. Yeah, and the second part of that question was also about exiting. So we will have DMI Finance and Piramal Alternatives. These are structured credit funds which cannot take equity position in liquid companies, listed companies. That's why these will be exiting as a part of their mandate, and so they will be taking an exit in the and we will have the HNI investors who invested with us will continue to still hold their equity fund account.
So they now converted to equity, and now they can't stay as equity. This fund, their mandate is that.
You've done some pre-IPO placement with prominent personalities and celebrities. Do you want to throw light on that?
Yeah. Sure. So this is not a pre-IPO placement that we did, and also this was the prominent sports personality were also probable investors that were looking at investing in the company, and the board chose to select from the available pool of investors, and that's how the decision was taken of getting them on board.
You arrived at the IPO price band.
No, I think one is as what the management discussed about the growth prospects in terms of the very, very unique play that Azad gives to the investors, and we have a detailed investor roadshows, and you will see also on the anchor book coming through on the 19th. And after all due deliberations, we have arrived after considering the other comparable companies in the same space. So that's how the pricing has been arrived at.
Thank you. Now we can have the closing remarks by the BLA.